undergrads and MBAs make is they chase the thing that was hot 10 years ago. So people come out of a school like Wharton and they say, okay, who's making the most money on Wall Street right now? It's the investment bankers, or it's the hedge fund traders, or 20 years ago would have been, it's the General Electric middle manager. And the problem is they're 10 years late, right? And so they're kind of chasing the old career path. So I think you need to think a little bit more creatively and say not what is the hot thing for a 30 or 35-year-old to be right now, but really what is the next thing, because you're going to be entering at kind of the ground up, and it's going to take you 5 to 10 years to get to a point in that career path that's meaningful. So it takes a little creativity. But whatever is hot right now for a 35-year-old, wherever you'd want to be if you were 10 or 15 years ahead in your career, that's almost certainly the wrong answer. It's probably the single biggest challenge. So I think this is true. So I'm both an investor, co-managing a firm, and also kind of an entrepreneur. So we were born less than a year ago. We're growing very, very quickly. So it feels a little bit like managing kind of a growth startup. So very challenging. So I think you try to be as organized as you can, and you try to outsource everything you can. So anything that you're doing, anything and everything, can you hire someone to do it? Can you give it to someone else? I'm not very good at that. I have to try to constantly force myself to do it. But that's the only way that you can scale, and that's the only way that you can free up. You have to free up your time constantly to make room for additional things. It was a few different things. So I was a trader in 2008, and the financial crisis hit, and the Federal Reserve was printing a crazy amount of money, as was the ECB and the Japanese central bank. And I thought, at some point, I'm going to get out of fiat currency because it's just being depreciated, and that's going to have an impact eventually. The other was a lot of Americans, and it's certainly true for people around the world, but even Americans were descendants of people who fled here. And that's true of myself as well, of grandparents who had to flee. Some relatives have fled successfully, others not, of Nazi Germany. And much of the world can really use a decentralized asset, an asset that cannot be confiscated by a totalitarian regime, for example. So one of the benefits or promises of cryptocurrency is it's an asset that you can flee a country with a password in your head, such that you can start a new life elsewhere with your wealth, or with some portion of your wealth. So we have a stereotype of refugees as being impoverished. They're often not when they leave their home country. The Syrian refugees who are arriving in Europe and living in tent cities with not a penny to their name, the reason they're in that condition is because they couldn't take their wealth with them when they left, because many were middle class, many had houses and cars and stores. So that was kind of the second angle, that having had relatives who had to flee a totalitarian regime, basically with the shirts on their backs, I want people in that situation to be able to be confident they can feed their children kind of if they leave a country that seems to be falling down that path. And then the last is, as an investor, the investment world has gotten pretty boring. So alpha is very hard to come by. It's extremely competitive. Investment returns for example, hedge fund managers have been extremely mediocre is an understatement for the last decade, mostly because of competition. And here you have a new asset class, a new product to trade, a new asset to try to model. So very, very exciting if you're an investor looking for the Wild West. The first ever reference to it that I could find, I searched my email fairly recently. A friend recommended a New York Times article about Bitcoin to me in 2011, when Bitcoin was about $3. And or maybe it was even less, maybe $1. And I just dismissed it. I said, cryptocurrency will never have value. And then it wasn't until 2013 that I kind of took a more serious look. And even then, I kind of dismissed it again. It was up 100x. It had gone from $1 to $100. How do you buy into that? It took me a long time to wrap my head around it, around what it is as a technology, as a economic construct, as a kind of new asset class. So it was really early 2014 that I bought my first Bitcoin, and it was really the start of the path. And I fairly quickly appreciated that there's fundamentally tremendous demand globally for an asset that can't be censored or seized. So the offshore banking system is about $20 to $30 trillion. Some of that is tax arbitrage or regulatory arbitrage, but some of it is Amazon and Apple and every big US company makes use of it because they want to have assets that a single judge somewhere in the world, including in the US where we have the rule of law, can't just kind of confiscate all their wealth. So seeing that there's this massive demand for that, and then kind of starting to dive into technology and being like, wow, this is really interesting and really cool. They used game theory to solve something called the Byzantine generals problem, or the double spend problem. That's just a really interesting, thought-provoking solution to a fundamental problem that allows you to have a world of malicious actors where you don't trust anyone, and yet create a system where we actually trust that the money is secure. To take the leap of faith, it took me a long time to get a basic level of understanding of all the different pieces. So a good line is that cryptocurrency is kind of like a graduate level 400 class, which is not to say that it's that advanced, but it has a lot of prereqs. So there's a prereq in kind of very simple cryptography. You don't need to be a cryptographer. I'm certainly not. You just need to understand like 3 pages worth, almost like a Wikipedia level of understanding to know how that piece fits into the broader picture. And same with blockchain engineering, and same with economics, and same with maybe call it market psychology or sociology. So it took me a while to get to that point. And then I became very, very confident that we were about to have the kind of parabolic wave of adoption and market appreciation that we just saw. And I gained that confidence because I kind of saw the things that were going to allow it to happen. So I saw the wave of adoption happening of kind of the smart money. So colleagues of mine at the endowment, family members who I had mentioned Bitcoin to 2 years prior, and these were kind of smart money family members who are never the first in, but are kind of at that early wave of adoption. And they finally were like, okay, I'm convinced, I'll buy. And seeing Coinbase's success, and seeing the first wave of more professionally run exchanges, and hearing that the CBOE was exploring launching Bitcoin futures. So there are all these individual data points that made me think, okay, we're about to finally have a wave of retail adoption here, and I gotta move quickly, because when the math is staggering. So there's 21 million Bitcoin that will ever exist. There's about 17 million right now. The other 4 million will be created over 100 years. And the people who own Bitcoin mostly aren't selling. So you have a very, very limited supply, and at the time, all of cryptocurrency was about 15 billion. So if there was a tiny bit of buying, I was at the endowment of Chicago, which had $8 billion. A tiny bit of buying, basically no supply, the price was going to go parabolic. So it was like, I have to move quickly. I think it really depends on your skill set. So there's tremendous demand for fundamental technical experts who will work on the protocols themselves. That's probably the hardest thing to do. It's a little bit like I could never be a professional mathematician because I'm kind of not smart enough in that very specific way that you need to be a mathematician. But math gets used in everything. So similarly, blockchain engineering or cryptography, that's one avenue, but that's not accessible to most people. I could never contribute to Bitcoin at the cryptographic level. It's like the world's best cryptographers who can do anything there. But then one layer higher, you have lots of demands for software development and engineering that's kind of like providing an application on an iPhone. So you're not creating an operating system, you're kind of using JavaScript to create kind of an iPhone app. Huge demand there, huge demand, and then you also have the business side of things, right? So we're going to see a massive boom in all of the infrastructure necessary to support this new ecosystem. So that means there's going to be demand for business development, sales, marketing, HR, management. You have a company like Coinbase, it's not really a tech company. I mean, most companies today that we think of as tech are not, like Facebook's not a tech company. They have lots of engineers, but they have more people doing everything else, doing marketing and advertising, sales and all that. So similarly in crypto assets, I think the best way to think of it is as an industry. So you can be an engineer in auto manufacturing or in aerospace, or you can do HR in aerospace. And similarly, if this is an industry that you're passionate about, then it's a question of, well, how, like every skill set imaginable is demanded there, even law, right? So there's huge demand for legal expertise in the cryptocurrency space. So if your expertise is law or your passion is law, and this is an industry you like, be a crypto lawyer. And there's a lot of different ways you can do that too. So, yeah. It's the Wild West in all regards, for both good and bad. If you're a young, ambitious person, you want that uncertainty, you want that lack of clarity. In a career path where every other Wharton student, for example, is competing for the same kind of 3 iBanking openings, and it's a very clear and rigid path, and you know exactly what you need to jump through the right hoops to succeed, that is an excellent path for someone who is unambitious, detail-oriented, and it knows that they're good at doing what they're told. If you're ambitious and you want to have the opportunity to leave a mark, to do extraordinary things, and you're willing to take risk, because it absolutely is risky to kind of enter a new industry where it's unclear what it means to succeed. Cryptocurrency is probably the industry on the planet right now that fits that bill. Some others that might be comparable would be, say, AI or maybe big data 5-10 years ago. You have sub-industries like drones or private satellites that are also kind of cutting edge. But cryptocurrency is about, you have this nascent, fast-growing industry that no one knows anything about, that is terrifying and scary, where we're literally creating the industry right now. So I think it's worth distinguishing blockchain as a type of database. And blockchain might die completely, it might get replaced by a better type of distributed ledger. So a distributed ledger is a database stored on many computers. A blockchain is one type of possible distributed ledger. So really what we're asking is kind of, will this wave of open, decentralized protocols kind of go away? And then cryptocurrency is tokenizing that distributed ledger. So kind of separate things that are important to distinguish. So blockchains can definitely go away. The existing cryptocurrencies might get killed by things that are better. So I think it really depends on kind of what your avenue is in the industry. So obviously databases aren't going away. They serve a purpose. Distributed databases aren't going away. So the pre-mortem, I think, is that segments of the industry could die because they get replaced by something much, much, much better. But you can, if you're kind of flexible, you can probably make that jump. So if you're a blockchain engineer, maybe you become there's something called a directed acyclic graph that is kind of a competitor to the blockchain. Maybe you become a DAG engineer, directed acyclic graph engineer. If you're a trader of the existing cryptocurrencies, I'll become a trader of whatever new cryptocurrencies launch. So the broader picture of kind of what could really sink, at least what I do, which is the investment side, I think it's one thing, which is regulation. So it's very, very possible, even plausible, that many Western countries will ban many aspects of crypto assets. And they'll do that because they're threatened by it. So to the extent they can't easily control and regulate and manage, they may bring negative enforcement action. They may try to regulate it out of existence. So that's not on the horizon right now. The US, Japan, South Korea, all these countries are actually very constructive. They're very supportive. They just want to enforce existing law, but that could change. It would really depend on the type of regulation. So we as a firm try to be very constructive with regulators and have an open dialogue. We're not anti-regulation as a concept. I mean, regulation can be helpful or hurtful, light-handed or heavy-handed. If all cryptocurrency investing was banned, for example, which we don't expect or foresee, a US-based firm can invest in cryptocurrency then. So the option for me as an individual would then be basically, do I go overseas? Do I not accept US investors? Do I create an entity that is offshore or something like that? Which would happen. So one of the reasons that the internet brought a lot of bad with it, but the US, one of the reasons the US didn't regulate the internet out of existence was because we knew it would just go elsewhere. That the US views cryptocurrency the same way right now, which is the US knows that the US is only 25% of the world market in all regards, including cryptocurrency. So the US matters, but not that much. So the decision facing anyone like myself would be, okay, the US is unfriendly to this burgeoning, fast-growing asset class with tremendous demand for consumers and investors all around the world. Do we need to relocate to Switzerland or Japan or South Korea or Singapore or whichever jurisdiction is friendlier? We would have to consider it, but we welcome reasonable regulation. So short term, I think we're finally going to see cryptocurrency used for its original purpose. So Bitcoin, the original Bitcoin paper, it was described as electronic P2P cash. And the idea was you should have the ability to send someone money in Venezuela or Argentina. And right now you can't. So many countries around the world have capital controls, even fairly liberal countries like South Korea. A South Korean is not allowed to send $10 million out of the country. They're forbidden by their government. So one idea is a payment rail. Another kind of important element of that is 1 billion people around the world can't get bank accounts. So in the US, we have Venmo and PayPal and ACH transfers and Wire. We're pretty happy with our banking and our ability to send money to each other. In much of the world, they're not and they can't. So I think in the next 12 to 18 months, we're finally going to see cryptocurrency used by average people in many parts of the world via a smartphone app, similar to a Venmo or PayPal, that lets them send money to each other and across border. So for example, it'll put a lot of pressure on the remittance industry, things like Western Union, where they're currently charging, if you have someone, let's say an Indian person in the US who wants to send money to their family in India, and they want to send $100, Western Union is currently taking something like $25 of that. So imagine if they could do it on a smartphone app and do it for 2 cents instantly. You don't have to go to some Western Union shop and wait 2 hours. And so I think that's a boring use case. It's not a sexy one. That's the use case Bitcoin was really created for way back in 2008 was when the white paper was written. I think we're finally going to see it come to fruition in the next year. Longer term, sky's the limit. So cryptocurrencies facilitate decentralized applications. What that means is literally any application you can imagine, whether it's a Facebook, whether it's, anything you can do on a computer, in a decentralized, trustless way. I'll go back to the industry analogy. So what you need to learn, I think, depends on the value you're trying to add to the ecosystem. So if you want to be an investor in crypto assets, you want to learn the basics of cryptocurrency, cryptography engineering, but really you want to learn how to be an investor. If you want to help a business like Coinbase grow and get new consumers, then you want to learn marketing or business development or sales and some cryptocurrency. So, and same with the law analogy. If you want to be a crypto lawyer, you need a law degree. So I think it's learn all you can about cryptocurrency, and that means kind of do the self-study Wikipedia thing. So you read an article, you come across a word you don't know, read the Wikipedia entry. You come across a term there, you read that. Because right now there really aren't books or classes. That you're starting to see some come out. You have MIT OpenCourseware, there's a Princeton public blockchain class. Those are great, scoop them up. But there is no course of study, there is no established way to become knowledgeable in this field. It's just diving in, while simultaneously pursuing kind of a more traditional skill set that you can then bring to this new industry.